Okay. Good morning, ladies and gentlemen. Good morning. Wow. Good to see you guys here because I think the haze is quite bad, right? Oh, you all don't know. We went coaching. This is actually our third stop. Wednesday we were in JB. Thursday we were in coaching. Today finally we are in KL. I always leave the best to the KL crowd. Okay? Actually depend on your applause lah. The louder your applause, okay? Okay. So anyway, just to check, how many of you guys actually have heard me early this year on the 12th of January, early this year over here? Anyone? So some of you guys did, right? So I think I mentioned about this particular thing called GOLD. Gold, right? You all know what happened to gold, right? If you don't know, later I'll share more about gold again, all right? Okay, so let's start proper. So this morning, my topic for this morning is actually riding the perfect storm in the fourth quarter, 2019 and beyond, all right? Do I still need to introduce about myself? Don't need, all of you know me already, right? But one thing probably I just let you know is I've been in the financial market for the last 20 years. This is my 20th year since 1999 in the stock market, bond, commodity, currency, even properties, all right? And something, since you are my friends, I just want to share this happy news with you guys. In April this year, I actually received the award, you know Yazhou Zhoukan? All right, I was nominated as the World Excellent Young Leaders Award winner. All right, thank you very much. No longer young, but still okay lah. Anyway, the definition of young is anyone below 50. So I definitely below 50 so can ma. Okay, so now for me is I'm also known as Mr. Cycle and Cycle Engineer because I think most of you guys know that I deal with this form of market analysis called cycle analysis. It's a field of study in analyzing recurring pattern and repetition in the financial market, which I use it to forecast the timing and turning point of different investment asset classes. Have you heard of this gentleman called Mark Twain? He said this, history doesn't repeat itself, but it does rhyme. So this morning, I'm going to share you guys a case study that happened in the 1930s. And we can use that to project what is going to happen for the next few years. Ladies and gentlemen, do you think next few years the economy or global economy will be doing well? Yes or no? Frankly, I don't think so. I don't think so. But the thing is, it's not the end of the US stock market rally yet. Not yet. All right? I haven't given up on my view about, I forecasted Dow Zone how much? 30,000, right? All right? Early this year I thought about it. Today I'm going to emphasize again. I have not given up on Dow Zone 30,000. Probably not this year. It should be next year. All right? So don't be too bearish. I know every day you all read a lot of negative financial news on CNBC, Bloomberg, but thing is, probably earlier Mr. Koh concentrate on Malaysia side. For me, I'll bring you guys out of Malaysia. Let's go global. All right, before probably Dr. Wong will bring you guys back to Malaysia again. All right. So let's skip this. Okay, this was an interview anyway by the age of me, that I did. In 2016, at that point of time, I forecasted Dow Zone 30,000. It was about 18,000 then. So a lot of people don't believe me. They say 18,000, how can go up to 30,000? Last night, actually Dow Zone dropped about almost 1%. It's slightly below 27,000, right? Because something happened in US. You all know or not? Don't know. The China sent their troops over to US. And they cut short the China trade war. The China-US trade war, they cut short their visit. All right? So the thing I want to say is this. From 18,000 to 27,000, you're here, never do anything, right? 18,000 to 27,000 is 50% upside. Though. So you just listen and sit down there and listen and don't do anything. My take is still got about 10% more to go. If it's 30,000, don't miss this chance. Is it okay? I hope next year when you all come back again, I can hear you all say, hey, Derrick, actually I make money from US stock market, and I will be very happy over that. All right? So that's a forecast that I did. So now, as usual, whatever this morning I mentioned, disclaimer, is for information and education purpose only. Is it okay? You all got to nod your head. If not, I cannot carry on. Agree? So it's whatever decision you make, be it trading or investment decision, after you hear what I say, is your own responsibility. Please be responsible for your own action. Is it all right? Can? Okay, good. Now, today we have 4 speakers. Probably each speaker, they have their own definition of time frame. This is my definition of time frame. For short term, is anything less than 1 month. Intermediate term is from 1 month to less than 1 year. Long term is from 1 year to less than 10 years. Ultra long term is 10 years or more. So this morning, I will concentrate more on short to intermediate term. All right? So now, let's kick off my whole talk proper. So this is what, when you open newspaper, you look at Bloomberg, CNBC, these 2 are the most important guys you see every day, right? All right, especially the left one. Always like to tweet, right? Happy, nothing to do, start to tweet already. And it caused havoc in the financial market, correct? The latest is, ladies and gentlemen, as of yesterday, this is the latest. Why US market dropped quite a bit because a China trade negotiator actually canceled their farm visit. All right? And this caused the market to turn down. Probably Donald Trump, he will do this again. Probably you'll say, no, they just go somewhere, then they'll come back again. Then the market will go up again. All right, so actually, Donald Trump is the world's best analyst and traders. Before he were to announce any bad news, probably he will go and buy, probably put option first, or put warrant. So when he tweet, market go down, he make money. Because can you see he's very powerful, no? He can move the market, he can make the money. That's why you see he fights so hard to win his second term, because you want to make another 4 years of money, correct? So that's Donald Trump. So now, every day as we read more and more on CNBC, on Bloomberg, this is what we see. The so-called the yield curve inverted, all right, to worst level since 2007. 30 yield rate under 2%, all right? Then the more we look, recession fears among fund managers rise to the highest level in a decade. Also, a lot of people confused already. That's why there's an old song, The Last Awards. You say, I wonder, should I stay or should I go, correct? My take is, at least stay for 1 more year, can? At least stay for 1 more year. Don't go too far yet. Or don't go off too fast yet. All right, stay for 1 more year. All right? Ladies and gentlemen, there are a lot of noise out there. So I'm glad that you guys, a lot of haze also. So I'm glad that you guys are here because the 4th speaker today, we are going to share very important information, stuff that will actually be very useful for you guys so that you can know what to do probably for the next 1 year for your own portfolio. Is it all right? Can? So now, I want to go a bit about history so that when we see history, we can more or less project what may be coming next. Because the current scenario right now happening in the global economy has a strong resemblance of what happened in the past. When I talk about past, it's actually the Great Depression between 1929 to 1939. Then, what happened then was the Dow Zone. This one may be a bit dry, but please bear with me because from this, we will know what may be expecting next and we can make profit from there, all right? So during the Great Depression, yes, that was what happened for Dow Zone. Dow Zone actually collapsed almost 90% from 1926 until 1932. 90% or 89.5%, is it a lot? It's a lot, it's a collapse, all right? But ladies and gentlemen, I just want to let you know this. This is not the cause of the Great Depression. The real cause of the Great Depression, you see, it was so bad until $100 you can buy this car because it must be in cash, because most of money lost on the stock market already. All right, that was what happened during the crash in 1929. But the real cause of the Great Depression is this, ladies and gentlemen. It was the sovereign debt crisis. Look at the red word, sovereign debt crisis, or in short form, SDC. And the banking system collapse that happened first in Austria with the failure of Credit Ansel that was partly owned by Rothschild. Do you all know Rothschild? Rothschild is a very so-called rich family out there. All right, so ladies and gentlemen, think about it. When you see this, it's something like in nowadays, when you see Warren Buffett bankrupt, will you be fearful? Yes, right. So from there on, because of this, it set off this thing, contagious fear, a great fear. And what happened, ladies and gentlemen, remember this year, 1931, remember this year, 1931, 17 countries in Europe defaulted on their sovereign debt. Their bonds simply go to zero during 1931 sovereign debt crisis. Ladies and gentlemen, sovereign means government. Debt, we refer to bond. Or remember this year, 1931, 90 US billion in sovereign debt disappeared from the face of the financial world. All right? The world economy contracted, and this entered into what we call the Great Depression. So it's the collapse of this that caused a Great Depression. This stock market crash is a symptom of Great Depression. You understand what I'm saying? Stock market crash did not cause a Great Depression. It is the default of the sovereign debt crisis. All right, and because of this, ladies and gentlemen, let's take a look. This is a U.S. Federal Reserve so-called discount rate. Can you see from the high of 1929, they keep on reduce the interest rate until this particular year, 1931, then Federal Reserve start to increase interest rate. Can you see that? Can you guys see? Can? So remember the year, 1931. Once they start to increase interest rate, what happened then? US stock market Dow Jones from 1932 to 1937, it went up 382%. This is the first thing I need you all to remember. Between 1932 and 1937, it went up 382% for Dow Jones. Then, US dollar, this US dollar index, because of a sovereign debt crisis, there was a lot of fear capital coming out from Europe and other parts of the world. They go into US dollar, pushing US dollar up very strongly, a very strong rally. Can you see that? Since 1931, okay? Then, between 1932 and 1935, gold actually went up from $20 to $35. It's about a 75% increase. And beside that, silver actually went up from 28 cents to 64 cents between 1932 to 1935. It's about 128% increase. All right, and between 1937 and 1932 and 1937, almost every commodity double, triple, or increase in value 4 times, right in the middle of Great Depression, ladies and gentlemen. So basically, we have a commodity bull run then. All right, so based on this, ladies and gentlemen, based on this case study, how to make money from the Great Depression? How? I will show you guys already. How? First one, the US stock market rally, you can participate in that, right? Second, strong US dollar rally, right? We just share you all here, one. Correct? And what's the third way to make money? Yes, gold and silver rally. Ladies and gentlemen, this whole pattern is repeating right now, and it's going to repeat going forward. All right, so do take note of these 3 things, all right? So now, let's come back to the present world right now. What are we seeing? That's why I've been saying, sovereign debt crisis actually has started in 2015. It has been imploding. It's going to get more and more serious probably until 2022. In fact, 2015 is what I call the Big Bang. Something big happened in 2015, like what happened in 1931. Ladies and gentlemen, let's think back towards the end of 2015. Something happened. You guys remember what happened? Sorry? China. No, not China. Something to do with the Federal Reserve. Federal Reserve, this Federal Reserve fund rate, towards the end of 2015, December, they increased their interest rate for the first time since they dropped it almost to zero in 2008. Can you see that? Until now, Federal Reserve, until end of last year, they all together increased the interest rate 9 times, right? So the first time was in December 2015, second time December 2016, 2007 3 times, and 2018 4 times, until Federal Reserve, July this year, reduced interest rate for the first time, right? Then 2 nights ago, they reduced interest rate another 0.25 basis point, correct? So, ladies and gentlemen, so that was a trigger, like what happened in 1931. And ladies and gentlemen, just like what I share you guys over here. Remember this? Also nowadays, if you look across the global, especially the government bond yield, can you see this section over here? It's actually November 8, 2018. Then you see all these little square. Each of the square is actually 2-year, 3-year, 4-year, all the way up to 30-year bond maturity years. Can you see it? That was in November 8, 2018. Then we cross over to this column is 5th of August 2019. Can you see simple term? More red square than blue square, correct? Red, what does it mean? That means it's negative yield. Blue means it's positive yield. So what can we conclude between November 8, 2018 and August 5th, 2019? What can we conclude? We are seeing more and more negative yield, so-called government bond in this whole world. Can you see that? Especially if you look at Germany. Can you look at the last, bottom 3, Germany? All the way from 2-year to 30-year, all is negative yield, ladies and gentlemen. Can you ever have, last time at least, ever thought that we will have negative yield bond? Do you know what is negative yield bond? Example, let's say I'm Germany. You all give me a capital 100,000. So probably 30 years, every year I give you a certain coupon, your interest back, right? By right? But the thing is now with this, probably you give me 100,000, at the end of 30,000, probably I give you 99,000 back. Doesn't make sense, right? Also, ladies and gentlemen, this is what is happening. I can tell you probably next year when I see you guys again, everything will be red already. Also, ladies and gentlemen, we are going through a very crazy world right now. Something that probably no one has ever thought that it would happen. But the thing is, I just want to let you know this. Why were there more and more red or so-called negative yield bonds? Because a lot of people buy into all these bonds. That's why the yield dropped to zero, because yield and bond price is opposite direction, correct? But the thing I want to say is this. For the Europe bond, do you know that ECB, European Central Bank, bought up almost 40% of the bond in Europe? And for Japan, the second last one, all right? So can you see, almost all of them are negative yield. Japan government bought up almost 90% of their bond. I can tell you, BOJ and ECB are destroying their bond market. That's why I say, we are in a place, in an era whereby we are seeing a sovereign debt crisis. This time around, the biggest issue is the bond market, ladies and gentlemen. And from bond, it will lead on to the stock market. You understand what I'm saying? Also, this is something very serious. It's not something very funny, but it's something very serious that probably when this implodes, it's going to be worse than 2008. Oh, suddenly everyone's so quiet. No, I'm not joking. It's going to be very bad. But before the bad thing comes, probably we'll see some light. The light is Dow Jones 30,000 or more. All right? I have not changed my view yet. Let me just finish this. All right, this like what I said, it's a total debt of this example. The government total debt of GDP in Europe, Greece is about 177%. If you look at Germany, Germany is 71%. That's all very high. And Japan, and that's this guy, Mario Draghi, president of ECB, right? Before he leave, last week, he actually launches new bond buying program again. He launched QE again, ladies and gentlemen, because Europe economy is very, very weak. He no choice. He has to do QE again. But the thing is, anyway, ladies and gentlemen, do you know he's leaving next month? and is passing the baton to the so-called the boss of the IMF. Also, ladies and gentlemen, she don't be too happy because she will be hoping a very big bomb also. Or she don't be too happy. Also, anyway, politician is like, or central banker is like that. They just get whatever they want, then they just pass the shit to the next one. Oh, really? So after October, 不关他的事了吗? Also, what he do? He launched a new QE again, no? Or then, this is for Europe, and let's talk about the third largest economy in this whole world, which is Japan. Japan's total debt is 2.6 times larger than its whole economy. Ladies and gentlemen, Japan, as we all know, the population is aging, all this thing, right? Or its economy is very weak. That's why Japanese government need money, right? How do you think government get money? The easiest way? Oh, print. Apart from print, tax. Also, what happened is, starting next month, Japan is going to increase their consumption tax to 10% from 8%. Right now it's 8%. Next month onwards, it's 10%. Actually, RB increased the so-called tax in 2014 from 5% to 8%. But from 8% until 10%, since 2014 until now, he actually postponed it twice already because Japan economy simply is too weak to so-called accept this tax. But ladies and gentlemen, next month, they are going to carry out this. So for those of you guys who want to visit Japan, still got time. Still got maybe 1 or 2 weeks. All right, go there because 8 to 10%, you don't see 8 to 10% is 2%. That is absolute term. But if you look at percentage, it's actually a 25% increase. Can you see that? 2 divided by 8, is it 25%? Is it like China, the US put the tariff on China? 25%? Also, ladies and gentlemen, so we are seeing so-called sovereign debt crisis slowly imploding in Europe and Japan, like what happened in 1931. Can you see it? Now, I'm going to show you guys, then where should we park our money? Earlier, if you don't know what I'm talking about, this is the important one from now on. So let's talk about stock market first. Because in 2015, Federal Reserve increased the interest rate. All right, so increase the interest rate. Ladies and gentlemen, let's take a look. What has the US stock market, how has it been faring? Since 2009 March, after the so-called global financial crisis, it collapsed by 50%. It has been going up and up and up and up and up and up, correct? Until end of last year. End of last year, there was a 20% correction. Then a lot of analysts, a lot of economists say that finally, after 10 years, this bear market is over, right? Then who knows, after that, still continue to climb. Also, ladies and gentlemen, that's why I can tell you this. This is it has a strong resemblance to a chart I showed you earlier, which is this. You remember this? Also, I can tell you, at the bottom of this 1932 is, based on my research, is about 2009, this bottom here. Then it recovered. Finally, in 2015, when Federal Reserve started to increase the interest rate, the US stock market, also at that point of the time, in 2016, 2017, Donald Trump became the US president, right? So he cut tax, all this thing, right? And he tweet, correct or not? And he hamtam Joe Powell, all this thing, right? So US stock market keep on going up and up and up and up. That's why, ladies and gentlemen, I can tell this. I forecasted this in 2016. Up till now, I have not changed my view, but for it to hit 30,000, probably not this year. It probably will be next year. We're probably going to see a final leg in the US stock market before this whole bear market is over. Okay? But I can tell you, in short term, probably we are going to see a correction until so-called this China-US trade war have some form of agreement. Is it all right? Can Why you all no reaction? If you don't want to answer yes, at least you nod your head. Can Because now I look at you all like that. I don't know whether you know or not. But ladies and gentlemen, I have not changed my view. So now, I want to talk a bit about so-called the inversion of yield. This is the 10-year minus 3 months. A lot of people out there, they look at 10-year minus 2 year, right? But for me, I can tell you guys, based on research, 10-year minus 3 months is a better gauge of probably when the recession is coming. Let's take a look. The so-called so-called yield inversion means 10-year minus 3 months become negative. This black horizontal line is actually the zero line. So when 10-year minus 3 months is below zero, so it cut below zero, then that is what we call so-called yield inversion. Is it okay? So, and can you see the gray area, the gray section? These are the period of recession. So it seems that wherever there's a yield inversion in the 1980s, in the late 1990s, and 2007, it always leads to recession. Can you see that? Can you see it or not? No, cannot. Cannot. So wherever there's it cut below zero, it always leads to recession. So ladies and gentlemen, we are here right now. We are below zero already. The first time the 10-year minus 3 months cut below zero, it was on the 22nd of March this year. Right, this 10-year minus 3 months. So ladies and gentlemen, so we are below zero. So that's why whole world is wow, hoo-ha about all this thing, right? Let me give you my perspective, how to look at this 10-year minus 3 months. Now I want to give you a so-called, let you know the relationship actually between stock market, economy, and property. Actually, stock market actually leads the economy, which leads the property. The peak of the so-called stock market is always ahead of the peak of economy. You understand what I'm saying? Also, I did a research on the last 9 bear market in the US stock market for S&P 500. You look at the second column here. That is the peak of the S&P 500 during the last 9 bear market, and this is the start of the recession. All right? But I want you guys to focus on the second last column. Days between the peak of the stock market and the start of the recession, based on this nice scenario, on average is about 183 days, ladies and gentlemen. 183 days is about how many months? Okay, 1 month, 30 days, right? 2 months, 60 days, right? So 183 days, how many months? About 6 months, right? Everyone follow? Also, that's why US stock market generally leads the economy before it go into recession about 6 months. Is it okay? Can? So now, let's come back to this 10-year minus 3 months. So I come back to this chart again. I go and actually plot between the first time 10-year minus 3 months cut below zero until the start of the recession. During the 1980s, it was 15 months. The second scenario, between cut below zero and recession is 9 months. The next one is 18 months. So on average, it's about 14 months. So when the inversion starts, until the start of recession, on average, it's about 14 months. Is it okay? So you don't kanchiong. You say, wow, cut already. Cut already, recession coming. Don't kanchiong, cannot. Because on average, recession only starts 14 months later. Okay? Then I go one more step further. I look at when the yield curve, the 10-year minus 3 months, go above zero again. Then from there until recession starts, it's about 8 months. When it go above zero again, it's about 3 months. When it go above zero again, it's about 5 months. So on average, can you see it's about 5.3 months? Correct? So the thing I want to say is, do you realize this 5.3 months sort of like quite close to this 6 months? So, okay, quite close to this 6 months. So my take is probably later on, when the 10-year minus 3 months, when it starts to turn up above zero, then we need to start to worry about probably the US stock market is going to peak already. Is it okay? So now, don't worry about what China, US trade war, whatever, all these things. Anyway, Donald Trump will never, ever, at least until next year, November, allow the US stock market to crash. Because to him, his report card is US stock market. He want to win his second term. He will try all ways and means to tong the market one. You understand? You know what is tong? Support the market. Or he will tweet lah, he will hantam Powell lah, he will say oil price too high lah, he will do all sorts of things. You understand? Because he want to win his second term. Or he will never crash on. But ladies and gentlemen, next year November, if he doesn't win, or even he win, maybe a different story. You understand what I'm saying? Also at this point, my take is do not be too worried about the US stock market. All right, so this is why I foresee that US stock market, maybe probably Dow Jones is going to hit 30,000 or more. All right, so now let's go and look at bond history, because I'm someone who like to look at a lot of history, historical data, and we can do forecasts based on that. I realized the last 3 times that the US 10-year minus 3-month treasury yield go into inversion, actually S&P went up 27%, 18%, and 22.85%. But since this year, March 22nd, when the 10-year minus 3-month go into inversion, until now, S&P only went up about 7%. So if history were to repeat itself, probably based on this, we may see more upside in the US stock market. Also, don't be too bearish, ladies and gentlemen, all right? Now, rather than the 10-year minus 3 months, I rather you guys look at this US unemployment rate number. All right, this to me is another factor that probably will decide when the recession of US is coming. All right, because since 1948, US economy has always entered or been in a recession when the unemployment rate takes 50 basis points or 0.5 from its trailing cycle low. As we are right now, our cycle low for this so-called unemployment rate, it was April this year, the lowest was 3.6%. So if 3.6%, you add plus 0.5, we should start to worry when 3.6 plus 0.5 is 4.1%. Okay? So we are not there yet, ladies and gentlemen. So as long as the US unemployment rate remain at low level, didn't go beyond 4.1%, ladies and gentlemen, don't kanchiong, can? At least for the US stock market, don't too kanchiong, cannot? 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 Okay, good. So now, this is my proprietary timing and you, because I'm the founder of Timing and You, my own program. This is my cycle chart. All right, how to read my cycle chart is this. This is for the month of June. Can you see July 01 until, this is not 2001, it's 1st of July until 1st of August. All right, this is for the month of August, this is the month of September. This, my cycle chart, this was crunched towards the end of August. Can you see 29th of August? Based on my cycle chart, ladies and gentlemen, this cycle chart is a combination of AI, artificial intelligence, and neural net technology. I input billions of data points into this based on the past data plus future market data. Then I came out with this cycle chart. Can you see towards the end of August, my cycle chart is already telling me probably we're going to have a turning point in the Dow Jones towards the middle of September. Can you see? Can you see not? Cannot? Turning point? Sorry, I cannot fly up. Okay, but you can see there's a turning point. That's why right now, at least as of last night, can you see? Around middle of September, US stock market, Dow Jones, we already have a pullback. And last night was quite bad. Look at the volume. This last bar here. The red bar, is it very long? Probably it means there's a lot of aggressive selling. Because market scared that, hey, maybe the China-US trade war, maybe not going to have an agreement very soon, right? So people start to sell. So I can tell this, ladies and gentlemen, probably we're going to have a significant pullback as forecasted by my cycle chart. All right, there will be a pullback, but don't be afraid by it, because after this, I believe it's going to break the red horizontal line and it's going to go higher. Anyway, this is historical high. This is historical high. Ladies and gentlemen, look across a global stock market, which is a stock market still is at a high one. KLCI? Definitely not STI. I'm a Singaporean, in case you don't know. Definitely not STI. This is the only one. All right? Don't need to woo. Must make money, then woo. All right? So the thing is, I foresee later on, after this pullback, we are going to break this high and go higher. But next, I'm going to show you a chart because next year is the US presidential election, right? So this year is actually the pre-election year. This is a seasonal pattern for pre-election year. I just want you all to focus between July and October. Can you see the blue line is actually NASDAQ, the orange line S&P, the black line is actually Dow Jones. Based on historical seasonal pattern, even this also is telling us that probably in September and October, we are going to see a pullback. Can you see that? Can you all see? But after this worst 4 months from October onward, can you see probably we are going on the high note? Also, I can tell you probably, ladies and gentlemen, September, October, historical annual October is not a very good month for US stock market. For example, 19 October 1987, we have a Black Monday, all this thing, right? Also, but ladies and gentlemen, so take this chance. If there's quite a significant correction in the US stock market, if you have not participated in the US stock market, this is your chance already. This may be your last chance. I'm not joking. This may be your last chance. If I've been telling you all US stock market never participate, this may be your last chance already. Okay? Also, then how to participate in the US stock market? Let me show you some way. Again, these are not recommendations. This is only for education purpose only. Is it okay? Okay, so if you feel that US stock market is going to continue to go up, my take is, if you are not good in reading financial statement, profit, loss statement, all these things, then don't buy individual stock. The easiest way is to track the US indexes. In the market, there are mainly 4 US indexes. First one, Dow Jones. Second, S&P. Third, NASDAQ. Fourth one is a small cap, which is Russell 2000. Probably Russell is probably too volatile. Let's focus on the top 3. So there's actually an ETF called SPDR, Dow Jones Industrial Average ETF. The symbol is actually DIA. When you buy into this DIA, anyway, this is listed in the US stock market. When you buy into this DIA, it will actually track the performance of the Dow Jones. That means as long as Dow Jones continue to go up, DIA will continue to go up. Is it okay? So it's not likely for Dow Jones to gap down unless something drastic happens. So if you ask me, I'd rather y'all look at DIA, all this index ETF. Is it okay? Unless you tell me you can, because US market trade at night, you say, never mind, I don't sleep so early on. Then probably if you know how to read financial statement, then go for individual stock. But I have to let you know, individual US stock, especially during the earning period, when they announce earning, they are very volatile. When the earning is bad, it may gap down, no? Then next day you go work, you don't feel happy. The boss see you face black like that. Then at the meanwhile, he say, hey, I'm looking to retrench people. Then you face black, okay, maybe you are the first one to go. Don't do this, Ken. Also, the easiest way is to go for all these ETF. All right? So like what I say, probably we are going to have a pullback. The red line is the historical high, the recent. Once there's a pullback, you probably can wait until it breaks above the so-called the red recent line, and you can buy on the breakout. Okay? But anyway, just to let you know, for those of you guys who have never participated in the US stock market, don't worry. In US, you can buy one share. So even though Dow's DIA is about $270, one share is about $270 times 4, maybe 1,002 or 1,003 ringgit. Is it okay? At least you track the performance of Dow Jones. Is it okay or not? You can buy one share, don't worry. All right? So then for those who are interested in the S&P 500, there's actually a ETF called SPY. SPY, which is SPDR S&P 500 ETF. Same thing, is also at historical high. Expect a pullback, what I shared you earlier, probably in September and October. Then probably if you want, you can wait until a breakup above this red resistance line, then you can go and participate. This is for S&P 500. Then for those of you guys who are interested in technological sector, there is an ETF for NASDAQ. The symbol is QQQ. The name is actually called Invesco QQQ Trust NASDAQ. All right? It will track the so-called the index performance of NASDAQ. All right? This, I feel, is the easiest way to participate in the US stock market. If you believe that the US bull market is not over, which I believe so. All right? So now, ladies and gentlemen, so you know, let's say you want to participate in DIA, in SPY, in QQQ, you know where can you go and find all these ETF? You know why, where or not? Don't know? Yeah? KENANGA. Kenanga platform has all these ETF. Also, for those of you guys who have not opened a trading account with Kenanga, please open it so that you can trade all these ETF and ride the rally in the US stock market. Is it okay? Can So now, then ladies and gentlemen, I have to forewarn you, probably along the way up to Dow Jones 30,000, we will see great volatility. Like what? Like what happened last year. Towards the end of last year, actually Dow Jones has a 20% correction. Remember? Then a lot of analysts say, wow, finally, bear market over, bull market over already, bear market come already. Then around the Christmas period, Donald Trump did his trick again. He tweet. Then market go up again. So that's why, ladies and gentlemen, so beware. We may see this again. All right? Don't be so-called frightened by this and you get out of the US market. Then your next question will be, Derrick, then how I know whether this next time if the 20% will really turn into a bear market or not? How I can help you guys is because for me, I come up with this relative risk index, timing and RRI relative risk index. I divided in the green zone, yellow zone, orange zone, and red zone. Short term, green zone means, very simple, means it's oversold. Red zone means it's overbought. So ladies and gentlemen, look at the black line. Where are we? We are at the orange zone closing into the red zone, right? It's like driving a car. You're already at the green light already. Red light coming already. What should you do? Don't be too aggressive, right? Because you need to prepare to stop your car, right? Ladies and gentlemen, you don't see this is just a line. It includes 14 major cycle analysis, technical analysis, fundamental analysis indicator, plus 47 sub-indicators. It involves a lot of data points. You will just see a line. But the thing I want to say is this. Next time, if you were to see a 20% correction from the peak to trough, that means from the top to bottom, don't be kanchiong. You need to come back and refer to my RRI chart. You need to see significant deterioration in RRI. When I say significant deterioration, means like here, a big drop like the 2008 or the year 2000. Over here, you see a big drop. Once you see a 20% correction plus a big drop in the RRI, then you call for a bear market to come. Is it okay? So during the end of last year, yes, we have a 20% correction. But look at my RRI. It was around here. There was not a big drop. That's why I say, don't worry, the bear market is not here yet. Is it okay? Then you all know where to find the RRI. Next time, whenever Kenanga have any workshop involve me, please come because I will always update you guys of my RRI. Is it okay or not? Can All right, good. Anyway, for those who have kids, the bear market is growing already, but not born yet. Born yet probably should be end of next year, if not 2021. We still got some way to go. Is it okay? Can So now, probably I'm going to skip this. Maybe I'll talk a bit about Malaysia market. This is KLCI. If you look at the chart, at least from the technical point of view, what do we see? You know what is McDonald? McDonald? Probably we may see the completion of a double top. But the thing, my thing is, I don't think you'll break down yet because as long as US stock market can tong, I think KLCI will not break down yet. You understand? But probably if you cannot find any good stock, but all the stock mentioned by Mr. Koh is very good, please look into them, can? All right? So if you really cannot find any other good stock in Malaysia market, please go US. Is it okay or not? Can? So now, next I'm going to cover on currency. Ladies and gentlemen, this is the US dollar index. This is the US dollar index. Remember, I said 2015 when Federal Reserve first time increased interest rate. It was here. Can you see US dollar has been going up? Can you see? Do you see some similarity between this and 1931? You understand what I'm saying? So I can tell this, ladies and gentlemen, for the next 1 or 2 years, we are going to see very, very strong US dollar rally. Why you're so quiet? Very strong US dollar rally. So strong until probably we will head back to what happened in 1985, the Plaza Accord, remember? Maybe you're too young, you cannot remember. Old man like me remember. Plaza Accord in 1985, US dollar was so strong until they gathered 5 countries, they artificially reduced US dollar 40%. And they forced Japan to increase their yen. And because of their yen appreciation, finally it led to the burst of the Japanese stock market and property market in 1989. Oh, don't believe me, go Google Plaza Accord. Is it okay? Can? So probably, ladies and gentlemen, if this is going to continue to play out, which I think is going to play out probably until for the next 2 to 3 years, US dollar probably is something we should look at. Then how to participate in the US dollar? Really, there's an ETF in the US market. It's called UUP, Invesco DB Dollar Index Bullish Fund. Once you buy into this ETF, if US dollar continue to go up, this UUP will continue to go up. Is it okay? Ladies and gentlemen, another reason I so-called point you guys towards the US stock market. Why? Because when you invest in the US stock market, when the US dollar goes up, when you convert your so-called profit from US dollar back to ringgit, because of a US dollar going up, you actually make another currency gain. Can you see that? That is the reason why I encourage you guys to look at the US stock market. All right? So, then I have to talk about USD and ringgit, right? High years were about 4.5, right? Over here is 3.8 during the Asia financial crisis. If nothing goes wrong, if US dollar continue to strengthen, probably ringgit will continue to maybe weaken relatively. If there's no interference, we may look at this going up towards probably 4.5. All right? I'm on that kind of outlook. I'm not too bullish about ringgit, but I'm very bullish on US dollar. Is it okay? Then finally, I'm running out of time. Commodity, this was early this year, over here, January 12th. That's me, that's Mr. Wee. I mentioned about this, it's exactly the same slide I mentioned, own gold. It's the world's oldest and most reliable safe haven. It has risen to a 5-year high, probably going to come more. Early this year, I mentioned the magical number to look at was 1360. For those who listen, once it break 1360, like what happened here, once it break the so-called 1360, it actually went up to about 1,000. Highest is about 1560, ladies and gentlemen. Ladies and gentlemen, look over here. Can you see this chart? Seems to have a resemblance to this over here in the 1930s. So I can tell this, ladies and gentlemen, my take is this. Probably this is not the end. For gold, probably after, and last night gold went up to 1524 again because of what happened in the US market. To me, for the next 1 or 2 years, we should be looking at gold going back to the 2011 high of 1921 or go even higher above that. All right? Also, do take note, this is the second time this year I come here to talk about gold already. All right? Then this for gold. Then how to participate in gold? First way is to buy physical gold. But to buy physical gold, you need to have a safe. If you don't have a safe, I have a safe. You can put your gold bar in my safe. All right? If If you don't want physical gold, you can go and buy paper gold, buy gold ETF. Or the easiest way to buy gold ETF is in the US stock market is this symbol called GLD. This will actually track the price of gold. If gold price continue to go up, GLD will continue to go up. If you say US market too far, ladies and gentlemen, GLD is also available in Singapore Stock Exchange. So if you want to buy GLD in Singapore Stock Exchange, you know where to buy? Yeah, very good. Do we have a price for her? Yes, Kenanga. All right. All this is available in the Kenanga platform. Okay. Probably I'm not going to cover this, but silver is something that we should look at also. The ETF is actually called SLV. This will actually track the price of silver, but this is in the US stock market. Okay. Then how to make money in the current sovereign debt crisis, ladies and gentlemen? Remember earlier I thought how to make money in Great Depression, right? Now how to make money in the current SDC? First way, US stock market, right? Dow Jones 30,000 or more, don't give up. Probably we are going to head towards that. To me, I think 30,000 is minimum. I think it will be higher, but I don't want to say more than that. Let's look at 30,000 first, Ken. All right, so first. Second way to make money? No, before that. US dollar rally. Third, gold and silver. This is the way to go. If for those of you guys who don't know all this, don't worry. Look for those Kenanga staff. Wear black color, red collar, and Kenanga one. They will know how to advise you. Is it okay? So Ken, with that, now is the time for Q&A, if there's time.
Yep. So just to add on, not just to buy gold, and also look for Kenanga to buy the gold ETF. But make sure to have an account with Kenanga. Okay, let's proceed to Q&A session. We would like, just raise out your hands if you have any question want to ask Mr. Derrick, then mics will come to you. Please. Sorry.
Mr. Derrick.
Hi, morning.
From Glen, good morning. Can you give me some comment on HSBC UK and HSBC UK and German Deutsche Bank? Both are the largest bank in Europe. Yeah.
I cannot talk about individual stock or ETF or this. Sorry, I can't do that on stage. Probably we can talk privately.
Okay.
Because
later
same thing, people may have a different interpretation.
Okay.
So we better don't talk about this. Okay? But one thing I can share on stage is Europe is not going to be well going forward. Euro is a currency that I don't want to hold. Euro. In fact, I'm shorting euro right now. It's a good time for ladies to go Europe and shop. Because your Prada, your whatever is going to get cheap. It's going to get even cheaper. Especially now when they do QE, right? Euro probably is going to drop further. And if you want to go to Japan, please do it before October because the tax is going to go up to 10% on the 1st of October. All right? So anyway, any more questions? Anyway, for those of you guys who want to follow me on Facebook, you can go to my Facebook. You can look at Derick Tan. You can add me in Facebook. In case I cannot answer your question today, let's keep in touch in Facebook, Derick Tan, DERICKTAN. Or add me in Facebook. Yes? Hi.
Mr. Derrick, thank you for your invaluable sharing. I have one question just now. You mentioned about how to make money SDC. What does SDC stand for?
Sovereign Debt Crisis.
Oh, okay.
Thank you.
Thank you.
So easy. So any more other question?
Mr. Tan, I'm not going to ask any question. I just want to request you, that means ask Kenanga to request you to come back and give a talk again, maybe in December or beginning of next year, to keep us aware and to be on track of what's going to go. What's going to happen in Dow Jones and so on. So next year, Kenanga.
Sorry?
Either January
can you repeat your question again? I just come back. I just come back, so can you repeat your question?
No, I say, I want to ask Kenanga to invite Mr. Derrick Tan to come back again, either end of this year, December, or maybe beginning of next year, middle of next year, end of next year so that we are aware of what is going to happen. I mean, we are not good at analyzing all that timing and all that. So Mr. Derrick is
Okay,
good,
before
you see?
that, can I have a round of applause? Let's say if you want me to invite Mr. Derrick again for our next seminar.
Thank you, thank you.
Okay.
Okay, I mean, don't worry about that. Actually, just to give you a heads up, our next market outlook seminar, Derrick will be one of our guest speakers, which is on February. But just do keep, stay tuned with our Kentrade website, and you will get the details after that. So,
Okay.
Okay?
So 1 year you invite him how many times?
Actually, if you talk about KL only, it's 2 times. If only KL, at least 2 times.
Oh, to make more time lah, 3 or 4 lah, 4 times lah. Okay, because now it's very.
We shall consider that. We shall
because
consider
now
that.
I very kenjong, no.
Oh, okay, okay.
Hey,
For us lah.
don't like that. I quite expensive one.
Oh, never mind, Kenanga can afford it lah. We all trade in Kenanga, you see, huh? So we also contribute to
Okay.
invite you to come.
Oh, sure,
Contribute
sure.
money to invite you to come. Thanks,
Sure.
Mr. Derrick. Thanks,
No problem, no problem. Hang on, our next question is that. Yeah.
Mr.
Yes.
Derrick, one more question.
Yes.
Regarding the investment into US market,
Yes.
yeah, or even you mentioned Singapore market, right? Can you enlighten us about, is there any taxation information that we need to be aware when we invest, then when we cash out? Is there any
No, it's just like
control
how
there?
you buy stock like that. Oh. Do y'all pay capital gain tax over here in Malaysia? I mean, for stock market? Then, not that I know of.
Okay, okay.
Yeah, it's just like normal buying stock. Don't worry. It's just that it's in US only.
Okay,
And it's
thank-
1 share per trade. Okay?
Thank you, thank you.
Can, any other question?
Yep, here, gentleman in the middle. Yep. Please, mic for him.
Hello. Yeah.
Yes, hi.
My name is Beng Yin. Now, I think most probably we heard about Donald Trump mentioned that he doesn't like the strength of the US dollars these days.
Yeah.
So as a result, one fine day he might do something tricky. So what will happen to the stock markets? And the
I just want
currency?
to say this. Yes.
That's question 1. Question 2, I think you focus your topic on US markets. How about China market, especially when they will be included in the world indexes?
Okay.
Thank you.
I know Donald Trump want a weak US dollar, right? That's why he keep on hantam Joe Powell. Call him stupid, right? Because go and increase interest rate or all these things. So, because we need to understand Donald Trump is a businessman. He's not really a politician. He's running so-called US like a corporation, like his Trump organization. Not happy, go and fire people. Also, he definitely want a so-called weak US dollar. But the thing is, like what I mentioned, what we are having right now is a sovereign debt crisis. There is a lot of fear capital around the whole world. Now there's 2 parts, and one part is actually US, and the other part is outside of US. There's a lot of fear outside of US. So money, remember, will not disappear. Capital will flow around, right? So when there's so much fear in Europe or even Japan, all these things, money will flow to where? They will flow to US stock market, causing US stock market continue to go up. But the thing is, before they can buy into US stocks, they need to convert their euro and yen into US dollar. So that's why I say Donald Trump can say whatever he wants, but he cannot fight the free market. The free market is, what I see is US dollar probably is going to continue to strengthen. It's probably going to replay of what happened in 1985 in the next few years. Probably we're going to have a breakdown in the global monetary system. Going forward, I say, it's going to be very bad. I'm not here to joke. I don't need come all the way to Singapore to here to joke with you all. All right? It's something very serious. You look at all the negative yield bond. It's creating a bubble already. Because this bubble is being generated by ECB and BOJ, Bank of Japan. They bub so much bond. I can tell you later on when this bond bubble really bursts, it's not because people are selling off all these government bonds. No. They are not. It's because there's no bid for the government bond. When you have no bid, it will start to crash. You understand what I'm saying? This is what I foresee is going to happen. And this is the biggest bond crisis that we see in the history. And it will lead on to the bear market in the stock market. So this is that's why I feel US dollar is continuing going to strengthen. Hey, where's the gentleman? Oh, okay. So that's the first. Second is China, right? For me, ladies and gentlemen, whether you and me like it or not, China is going to be the world #1 economy, based on my cycle analysis by 2032. Shanghai probably is going to be a world so-called financial market. All right, look at what is happening in China, Hong Kong right now. Later, probably in the afternoon, Mr. Wee will talk more. Hong Kong is probably China will let Hong Kong rot already. Because Hong Kong's GDP is only 3% of the whole China's GDP. 3%. It used to be 1997, about 20%. Afternoon, Mr. Wee will talk about it. So my take is, if that's happened, they're probably going to clone Shenzhen into another Hong Kong. Okay, so China, whether we like it or not, sometimes I find the Chinese people, they talk a bit loud, right? Sometimes I go somewhere, I cannot done, but too bad. They're going to probably they are doing this because they feel that we are coming up, right? That's why I always say these two things. 我爱人民币，我爱习近平. Really. I keep on talking about this. China, whether you and me like it or not, it will be going up. And since you thought about this, it's a very good question because probably because of this China-US trade war, probably one of the so-called market you can look at will be the China market. Actually, China actually rebounded. This Shanghai Stock Exchange composite actually rebounded until May. Donald Trump go and increase the tariff again. Then it pulled back. But now, if you look at technical analysis, probably it's forming a double bottom. So probably it may break up, it may go higher. So if you want to participate in the China market, there are ETF also. But you can participate in the Hong Kong Stock Exchange. This is the, the symbol, 2822. Tonight, first prize, CSOP FTSE A50. Can you see it's forming a ascending triangle. Once it breaks above this 1565 so-called resistance, probably it's going to go higher. There are signs that China market may be bottoming out already. All right? Then you say, don't want this one? Then we have 2823. Tonight, second prize. Which is FTSE A50. It tracks the China market, the 50 largest company in China market. All right, also forming a ascending triangle. Once it breaks the first rate resistance line, probably it's going to go higher. So, ladies and gentlemen, my take is, going forward, we are seeing Donald Trump destroying US. Agree? He's trying to so-called closing up US. Because he wants to make America great again, right? Actually, if I'm Xi Jinping, I'm very happy. You continue to destroy US, I'm coming up already. All right? So my take is, be it you are in stock market or be it you are in business, especially in China, tap on this thing called Pte Ltd, One Belt, One Road. Is going to be the biggest event in the history of China. All right? And it was first announced in 2013 by Xi Jinping in two places. One of it is in the Parliament of Indonesia in 2013. All right? And he's pushing it. And I believe this new Silk Road is going to propel China to be the #1 economy in this whole world. Sorry, China government don't pay me. But the thing is, this is what I see based on cycle analysis. The economy power has shifted from the west to the east. In fact, if you have kids, probably you should let them learn Mandarin. 会讲华语吗? That's very important because next time probably 我们是去中国玩食玩食。什么 makan what Julie makan Julie makan, yeah, correct. Julie makan, right? Jali makan, Jali makan. Give me a bit of time. I come here more, my bahasa will improve. Can? Okay, can. Okay. Any other question? Or no more? Yeah.
Thank you, Mr. Derrick, for your very insightful sharing.
Also,
thank you very much.
Before I end, I just want to leave one thing before I end. Yeah, you can add me in Facebook, of course. You can add me on Facebook. But before I end, ladies and gentlemen, I'm going to leave you with this. May the timing with you guys. All right, thank you very much. Thank you.
Thanks, Derrick. Thank you very much. Thank you.